Hey everybody, it's Brian Shannon from AlphaTrends.net. Today is Saturday. It's the 17th of October, 2015. Let's take a look at these markets. The S&P 500 finished with a gain of about 0.5% on Friday, bringing the weekly total to a percentage point, and in a big month for these markets. So for the S&P up 6%, NASDAQ up 6.5%, Russell 2000 about 8% or so for the semiconductors, etc. You can see the notables are oil, which was down on the week, and as was the U.S. dollar and the Russell 2000. But still, for the month, the only thing that's really lost ground on what we look at here is the U.S. dollar. So let's take a look at this market and try to make some sense of it. We have seen this market. Obviously, it broke this longer-term trend line, and now we're coming up to it, and as well as this prior bigger band of support. So this prior bigger band of support, along with these declining longer-term moving averages, such as we've still got a declining 50-day, 100-day, 150, and 200-day moving average above us. So it's still very difficult to trust, and we've certainly seen a lot of volatility, but we're seeing resilience from the buyers here, at least over the last couple weeks. So when we look down at a 30-minute time frame, you can see that this week we did get below that 5-day moving average and broke some support, but we didn't turn negative here because the 5-day moving average didn't turn lower. It certainly had the potential to find the resistance there and then break lower, and then I think we would have been in for a good position to be able to short, as we did have this, the prior peak here potentially acting as resistance, and now just above we have this band of prior support that really, I mean, this is a narrow definition of that support, but realistically, it's up in this area, and we can take a look at the year-to-date volume-weighted average price, which is just ahead in that same little band of prior support, which has the potential to become resistance, along with the year-to-date volume-weighted average price. In my mind, that makes it likely that 204.5-ish is going to be a level of resistance, but until we actually go up there and turn lower from it, it is just a potential level of resistance. You've got to be impressed with the buying in this market. It's certainly more than I expected, but as long as you look at it, if you're looking at it skeptically and you say, well, I don't believe this market should be going higher, it's one thing to think it and to not take action of shorting until the market tells us that's the right thing to do, versus sitting on the sidelines, let's say, or more importantly, looking at shorter term time frames and saying there is opportunity here. Here's what I think represents the more important trend here of the last couple weeks. So since this market gap from that level, we could also take a look, of course, at the volume weighted average price from this low a couple weeks ago, and you see that's exactly where we found support here this week. Or we could take a look at the volume weighted average price from this level. So I think that is from the gap. So it appears to me the most important level for this market to hold above over the next week or so is 199 to 200. We've got that trend line in there. We've got this prior little band of resistance here, which did hold as support this past week, and we've got those volume weighted average price levels. So going into next week, it remains an environment where know what your time frame is. Understand that we've got a lot of earnings coming out right now. We're really starting to see the earnings flow, so be aware of each individual stock when they're due to report, and know whether you're comfortable or not holding stocks in front of earnings. Personally, I'm not. It doesn't make it worth the risk reward, but that's me. You've got to do what's right for you. As I always say, I never tell people what to do. Instead, I'm more like a coach saying, here are the key levels to be aware of, and then you decide what to do with them. But you don't want to be selling short while the market is going higher, regardless of what you think the market should do. You've got to look at it objectively and say, yes, we consider the rallies with declining 50-day moving average, such as in the NASDAQ. When the 50-day moving average is declining, we look at it suspiciously, but it does not mean sell short. You don't sell short when the rising 5-day moving, when we have a pattern of higher highs and higher lows, and we have a rising 5-day moving average. So We've seen a good rally, obviously, from 99 to 108. So we've seen, close to a 10% rally here over the last couple weeks, but the market is showing no signs of slowing down, so it doesn't make any sense to sell short. We look at this little trend line, which represents the essence of this recent trend, and we can see in here, just on a very basic level, where this prior band of support in here, I'm sorry, this band of resistance in here became support. Now we would expect that this is the next band of potential support should we pull back. So for early next week, I think right around 107 is the important level for the market to hold up above. That's of course where we see that rising 5-day moving average as well. Looking at a 30-minute time frame, again here we can see that we've got these prior highs over here from September. So that's a potential area where those sellers may come in. But we look at here, the year-to-date volume-weighted average price has been holding a support this week. So 106 to 107 is going to be an important level, I think, over the next coming weeks here. And we're now battling with these the cluster of moving averages here, where we can see here's the 200-day or 40-week, and we've got the 20 and 30-week or the 100 and 150-day equivalents right now on the daily time frame there. So the NASDAQ, we've got to give the benefit of the doubt to the buyers in the intermediate term, but look at it with an overall eye of suspicion. So the Russell 2000, still, we've got this longer term downtrend from this year. This is what might end up being an important higher low. And this is something I think I spoke about last week, is that, we've got the potential for an inverted head and shoulders pattern in the Russell 2000. Let's back it up for a moment, though, and take a look at the bigger picture, because we still have that potential bigger band of resistance up near 120. Now that's 5 points away, so it's still about 3.5–4%. So you have to ask yourself, is the risk worth the potential reward of rallying up towards that level? Will we in fact find resistance up near that 120 level where we had prior support and where we have these declining longer term moving averages? If you're like me, then you're not, you're aware of the longer term trend, but you have to look at it and say, okay, I can't make daily decisions based on the longer term trend. I want to look at it and say, the Russell 2000 broke down this week, but it recovered very nicely. This is a key level of support right now, and I think that early in the week we want to see about 114.5, let's say 114.25 to 114.5. We want to see that level hold as support. If that can hold as support, then looking at this 10-minute time frame, we've got this 114 to 114.25. If that can hold as support, then perhaps this market is able to catch up to some of the other indexes. One thing that you want to look at here is, we've been testing this declining 50-day moving average in the Russell 2000, very similar to the action that we saw over the last month in the semiconductors at the 50-day moving average. So the semiconductors, nailed that 50-day moving average a couple times and backed away. Then it finally broke through, and the buyers have been very persistent here, regaining the control. So this prior band of support in here that did act as resistance for a while is now back to becoming support once again. So the bigger, more important level is going to be this level in here, basically 51.5 to 52. As long as we remain above 51.5 to 52, I think that this market, the semiconductors, have the potential to continue to rally up towards 55, 56. And you have to be aware, though, also, will we find sellers at the 200-day moving average? And, no one said this was easy. We've got the volume weighted average price year to date right in here. So maybe a little further backing and filling, as we have had a heck of a rally here. And again, looking at the month to date return in the semiconductors up 8%. You have to ask yourself, where has it come from? It's come basically, again, 8% this month. Where does it have the potential to go before it's likely to encounter a source of supply, which might offer resistance? And we're at one of those levels right here at the time in the semiconductors. The biotechs have been the obvious laggard here over the last several weeks, that they've bounced only, let's take a look in here again. For month to date, they're up 3.6% versus the these bigger indexes, which are 6-7%. So the biotechs are still very choppy in here, and we're seeing a lot of volatility in the individual names. We've got stocks basically blowing up in here left and right, but the index is trying to find some support in here right now. This is basically the 300 level is a key psychological area, and I'd say 295 to 300. If we can maintain above there, then we look for at least further stabilization, if not further upside from here. And you can see that this past week we broke an important little band of resistance between 310 and 313. So we want to really see that 310 area hold this week ahead. If we can hold above 310, then you can see that this was, for this, here's a 10-minute chart going back 2 weeks, that this band of resistance, we broke beyond it. So on Thursday, we gapped lower, had a phenomenal rally, pulled back, and that prior band of resistance held a support in that 310-ish area. So if we can continue to hold 310, I think we can, bounce a little bit further, perhaps even all the way up to the 50-day moving average. And keep in mind, the 50-day moving average is a moving average. It's not static. So that is still declining. So perhaps we see something where we kind of, pull back a little bit and run up towards that declining 50-day moving average. But the biotechs are still the bigger level, the bigger market with troubles. However, 310, if we continue to maintain above that, perhaps the tide can turn a little bit further back to the upside in the biotechs, the way they have in the semiconductors, in the way they have in the NASDAQ, and some of the other areas. Let's take a look quickly at Apple. Apple maintains below that volume, the moving the trend line since the last earnings report. So obviously earnings are going to be something that's important here. It looks like, as we are, still battling that declining 50-day moving average, the NASDAQ, the shares of Apple have been a laggard compared to the NASDAQ, and we've got what's looking like a bearish flag here. Now, the bearish flag, you don't just short in here. You short when it makes sense on an intermediate term time frame. So we look at it and we say, okay, we're finding resistance in this area, and we've got this trend line. So I think, against 112 or so, the sellers are still in control of the intermediate term trend, and perhaps breaking down below this little band of support, 110 to 111, but be aware of when they do report earnings. I'm going to be in San Diego the next couple days at Stocktoberfest, so hopefully if any of you are attending, feel free to stop by, say hello, let's grab a drink or something, and hope you're navigating this market well.